All right, let's get started here. Happy Monday, everyone. It's March 4th today, so we've started the new seasonality. We've started the new trading month, and let's see where we go from here. There's been a decent debate over past few seasons, but pretty much everyone can now agree that crypto winter rally is finally over. So Bitcoin, along with some other major cryptocurrencies, have seen a massive recovery since the end of October. You can see here we got Bitcoin on the screen, very very close to that most recent all-time high that we've saw, or maybe not so recent, but the last all-time high that we've seen. So coming out of a huge deep freeze and a large downside that took place pretty much over the last 2 years, things have not necessarily defrosted, but have heated up the engines in recent weeks as splash headlines and new developments prompt the industry to shout back to the moon. So Bitcoin's up nearly 30% over the past week. And more than 150% over the past 6 months. It's currently trading at about $65,000 to the US dollar, as the cryptocurrency closed in on its all-time high around $69,000. So this was set in November in 2021. The strong advance comes with strong risk-on sentiment in the broader market, though there are multiple drivers specific to the industry, and there also have been also sparked a rally in crypto stocks in general, so Mara and whatnot. First and foremost, among the catalysts have been the launch of spot Bitcoin ETFs and the subsequent cash inflows from Wall Street and the retail crowd. BlackRock iShares Bitcoin Trust IBIT has even amassed $10 billion in under 2 months, marking for the fastest any new ETF has ever hit such a milestone. The launch has helped cement crypto as an established asset, giving the avenue to those waiting to use it as a mainstream vehicle to hedge and diversify or invest in the sector. It's also created a robust demand for hunting or digital gold, helping push the price of Bitcoin higher and higher. Bitcoin is scheduled to undergo its fourth halving in April, one of the most anticipated events of 2024 within the crypto space. And halving is a process where Bitcoin mining is cut in half, reducing the number of new Bitcoins released to the market, and was introduced to ensure BTC remains scarce. Investors have often targeted the period before the next Bitcoin halving to acquire more Bitcoin in anticipation of the post-halving rally. So that necessarily hasn't hit yet, and we'll see how that impacts generally on a bullish note. Now, we're coming into general stock market seasonality. Well, some shifts, as you can see here. I'll show this little interesting image here. This is the S&P 500 seasonality that marks here. Let's just change the asset here so we can see the SPY. This generally marks some kind of interesting aspect to seasonality. You can see towards the middle end of February there was the expectation to see some kind of a downside. All we've seen so far this year has been upside. Into the middle of March, there's expected downside to continue before we start rallying. Now, the expectations for the overall market, for mine are a bit different. My opinion's a bit different. I don't live and die by the anticipated moves, though, That's the first thing that you should know as an investor, as a trader. You have to be fairly malleable. And the reality of the situation is that we're continuously bullish and we're continuously trying to see a rally. It's just, are we going to see any meaningful pullbacks this year, or are we just going to continue rising? Another asset that's very interesting and important to us is going to be crude oil. There's been a lot of talks about crude oil in the anticipated upside momentum move that we can just that we could bet on finding a very strong base and low to see if this thing can rally a little more aggressively. So OPEC Plus has decided to extend cutbacks in oil production, though the first half of the year, to support prices by warding off surplus. So curbs of 2.2 million barrels a day will remain until the end of June, with Saudi Arabia making up half of the promised cuts to output. Sticking to voluntary production cuts until the end of the year would be a strong signal and should be seen as price positive, So although an extension only into Q2 likely has been priced in and should not move prices too significantly, what we've seen here is the massive multi-week rotational aspect of crude oil, and right now we're trying to peak outside of this blockade of, I guess you can call it support or structure, When we start peaking out of that blockade, realistically what we're expecting is to see some kind of a rally. Some of my price targets are between 88 and 93 realistically to the upside, seeing if we can expand a bit higher through those areas on crude oil. now that we're out and above this 80 area. I like price as long as I can stay out and above 80. There's potential to see a stronger push. I think commodities, I think miners, what's it called, metals, right, are reaching some kind of significant bottoming that can start a decent little rally over the next few months. And I think crude oil might have just started just such. So that's something to watch for, and that's going to be something interesting today and, or I guess this week in a few months. And the S&P, right? The S&P has been enjoying a very, very strong run into the start of the year, right? A massive, massive thanks to artificial intelligence into the end of last week. We saw Nvidia rebound pretty aggressively, making new all-time highs here pre-market, gapping even higher. Google is one of the names that's kind of been pulling back based on some of the AI news from Gemini that's kind of been pulling this thing lower. But massive, massive AI money flowing in, and we've seen a huge, huge pop in that. Speaking of the benchmark, right, we've seen now that super microcomputer, SMCI, one of the most talked about individual names, and Decker's Outdoor will be added to the S&P 500 as a part of the latest quarter rebalancing, replacing Whirlpool and Zion's Bank Corporation. The changes ensure that each index is more representative of its market capitalization range, and the S&P Dow Jones said in a statement that's adding Amazon right to the list. So we'll see how that plays out and how that keeps in mind. But to start the week, we've seen minor pullbacks in equities here. If we take a look at the S&P 500, it's pulling back after some heaviness of volume into Friday's session and the overall evening session here, trying to pull back into this 5130 area on the S&P 500 futures. Last week, we finally emerged out of the range after being held by some PCE data that started off some of this bullseye momentum. And then on Friday, right, Fridays pretty much get rallied fairly aggressively. So that's what we saw into the end of the week. So now, as things are pulling back, I'm not necessarily super bearish on everything or trying to call this market top. But I get bearish if we start entering a distribution lower, which puts us under that 51-20-25 area. Otherwise, if that region holds, as long as that region holds, I do want to see the buy side step in to keep us afloat on the NASDAQ, right? We're not pulling back as heavily, I would say, as we were or we are on the S&P 500 because tech is still seeing a decent amount of buying. And I want to start off looking for some dips to buy realistically to start the week off strong, and then we'll go from there. If structure changes, meaning that we accept back under key distributions, then we don't really have a choice but to understand how the volume is going to work against the longs and open up some of the doors to the short. So that's what I'm going to leave you with. Let's wrap this up for the day. I'm going to open up our live trading room here. Hope everyone has an amazing trading day and gets started on the right foot. Remember, trade smaller at first, right? Get a feel for the market, and then we'll look to step on it. So I'll see you guys in there. Take care, and we'll do this again tomorrow.